Okay, this is WHN, and this is the weekly chart. I've taken some support resistance levels from my high volume bars, being at 2.6 cents, 5 cents, 7.2 cents, 10.5, 12, and you can put one there at the high at 19 cents as well as target resistance. And we've had a bit of a downtrend for a while now, and it's kind of moved sideways out of there. If I disconnect these two up, and well, it hasn't really, has it? It hasn't really. Well, hang on, I've missed that. Hang on, let me do it properly. That would be probably a better indication. That was a bit of a worry. That's if I ignore the spiky bar and just put it on there. It's that's probably cheating a little bit. So we are moving sideways. I think it's formed a little bit of a base here. So I think I don't think we're really under the shadow of a downtrend line. If I cancel, if I take that high and that high, that high, that high. So we've moved sideways out of that downtrend line. And we have started a little blue uptrend little channel here. It goes from about 2.5 cents to 5.2 cents. So it's a bit of a broad channel, but you get that with a 5-cent stock or a 4-cent stock. But we'll just zoom in. We're watching this over the past couple of weeks, and we're hoping for a long setup, a long VSA setup. You can see we got the high volume up bar, but smart money typically sell on up bars and typically buy on down bars just because of the size of their holdings. That's the way they have to do it. Most of their buying will be on down bars, most of their selling will be on up bars. Now, so when we see a high volume up bar, we're automatically suspicious that smart money is selling. But if we look to the left, we've got an old top, so it could be quite possibly that they are absorbing the supply from the left, and that would account for the high volume or the high selling within that up bar. So what we want to do then to look at to confirm that they're absorbing that supply is for that high volume up bar to be tested on low volume bars. If they're truly absorbing that supply and want to take it higher, they will test that area, bring it back, mop everything up first before taking it higher, because they don't want to be swamped with selling at higher prices. But if they're distributing, then we won't see that testing, we'll see the price fall. And so we had a high volume up bar that week. We're looking for a test and we didn't get it. That's not a test, that's a down bar, but most of the body of the bar is up thrust to close of a high supply bar, and there's still very high volume on the bar after it. So they're still selling on that bar as well, and we've closed lower and up thrust a bit, and then the next bar closing lower, breaking our breakout confirms that there was that there's weakness at the top there. And it could be when you're at the top of a trend channel. So we are taking that trend channel from these two lows and then parallel that onto the intervening high. So that's a Wyckoff channel. Just added a center line in there, and it's at the top of the channel, so it probably wasn't the best place to look for a long entry, but it didn't set up anyway. We're looking for low volume narrow spread down bars like this, followed by the next bar up, and that didn't set up for us, and it's collapsed now into the body of this bar, and the volume is still, even though it's lowest in 3 bars, it's still quite high. Man, we want this sort of volume here on down bars to show us there's no selling left. We haven't got that, so we need to look to see where that where our next entry might be. We've got the bottom of this channel, but that's a ways down. We've got the bottom of our breakout bar, which is 4 cents. We've got the top of this high volume up bar here, where they're pushing through supply before, 3.8 cents. So that might be a possibility, because they spent a bit of effort pushing through there, absorbing the supply in this area, and that gave us this little ascending triangle. So 3.8 cents even might be a place to watch, and we're watching for these narrow spread low volume down bars, and if it breaks down further, then we've got the bottom of our channel there as support as well. So yeah, so unfortunately that didn't set up for us, and we didn't get the test we're looking for. We didn't get it confirmed, so we wouldn't have taken that trade, and that's why we don't chase the price on these high volume up bars. It's all exciting, everything's exciting, but what we have at the moment up here is anyone buying up here is now trapped or a weak holder, and that if they sold now, they would sell at a loss, and they'd probably bring that back down to pressure those positions there. So so that's why we don't buy on the high volume up bar, and that's why we wait to see those bars tested, and on light volume to show us that the selling is gone in that bar, and that didn't set up for us. So we'll just have to wait and see now. We've got 2.6, we've got at the very low there, or 3 cents, between 3 cents and 2 cents is our last really high volume. Well, that's not, no, that's if it breaks further down. We've got 3.8 cents there. We've got the close of that bar, which is 3.3 cents. There's a whole range of areas there we can look at, and we've got the middle of the channel as well we can look at, but we're looking for one of these really narrow spread, really low volume down bars confirmed by the next bar up. That's what we're looking for, and yeah, until we get that on the weekly, we're not going to we don't have a long entry. This is TRH, and just got the daily chart up here on this, and what have I marked on there? I've got some high volume bars marked as potential levels. I think I've marked the highest volume bar, the high and the low of that bar, and the low here where it really kicked up, where the volume really started. I've marked the low of that bar as well, and then the absolute low down here as well. So we can probably now mark this bar as well. So it's had a breakout, and this was a newsletter announcement, and so it's had a really high volume up. So just have a zoom in there. Okay, so we had a breakout over here previously, and we're waiting for a test of that breakout. We didn't get it. We got an up thrust. That was a weak bar actually breaking out there. That was a weak up thrust bar. But the next bar closed on huge volume as that newsletter came out, and the subscribers to that newsletter jumped in. In order to get some breakout traders jump in there as well. But look at so the volume is really high. But look at the bar. Look where the bar closed. It's closed on the low, and it's narrow. The spread is actually narrower than the lower volume bars. So if that was all buying, it couldn't close on the. How can it close on the low like that? And how can the bar be so narrow relative to the volume? So there must be a lot of selling on that bar then for that to happen. And if it had an old top here to the left, we could say, well, maybe they were absorbing, smart money were absorbing the trapped holders to the left, but we got no old tops here, so that's all selling. That's selling there, and it's that doesn't mean it collapses straight away, because the demand can persist. The momentum they capped it there, but there's enough momentum left from the herd to drive the price up higher. But what we want to see is we want to see this bar tested to confirm that yes, smart money are interested in higher prices and they're coming back to test this bar. So that's what we're waiting for. It's come back, so it's gone up. We had an up thrust. It's come down on light volume. Then it's crashed down. Then it broke. Once it broke the low of this bar or the close of this bar, then we were in trouble. And then it's jumped back up into the bar, but it's jumped up on no demand, and that can't happen. You can't get back up there because there's a lot of supply now in this bar. It can't get through there on no demand. It's like trying to drive a car uphill without the gas pressed down. So that was a very weak bar and very shortable. If you could short, you can't short this, or I don't know if you can or not, short TRH, but that's very shortable. Because you had up thrust, you had weak bars here now showing a high volume up thrusting at the top. You had confirmed by you had the gotcha bar, which took you out past the high volume. That's what we're looking. That's what we call a gotcha bar. That's the bar that widespread bar that takes out the high volume area. And then we're looking for any up thrusting or any low demand, no demand bars trying to get back up into there to go short. So there was your no demand. There's another, that wasn't a no demand, but it was a narrow spread bar as it tried to push through that $1.01. I probably should put a line on there. $1.01. Oop, wrong one. $1.01. And then as it's tried, and then it's up thrust. We've got the up thrust on no demand, and that's shortable as well. So narrow spread, we don't like narrow spread up bars because they have selling in them. We've got the no demand, and then once it broke, you could have put your sell order just below your short order, just below the a sell stop just below that, and you would have got taken into the trade if you're trading short. So that was a short setup right there. But I don't know if you can short TRH. But anyway, that's what we call it. That's a VSA short setup. High volume, break that high volume, and any up thrusting, up thrust in there, and then a no demand. And here we get an up thrust, and followed by a sort of no demand. Up thrusting, no demand, up thrusting, and no demand. We can short, go short in there. But anyway, it's come off and it's come back to the breakout. See, we didn't need to chase that area. See, they never came back and tested this supply line, and that supply line is taken from the high volume area here. So when it's gone up here, we would have been better off letting it go, because we suspect that they'll bring back and test in this area if they want to take it higher. And it has come back to that area, but I think that's because they were distributing in this bar, and now we want to see what's happening next. And it's come down on increased volume, closed on the low, or in the middle, sorry. So we've got the temp there to support as it's come in. What else have we got? We've got this uptrending little blue line, so we can see what we want to see is some light volume down bars now, some narrow spread. So we've got some here, some narrow spread down bars. Next bar closing high. On top of this uptrend channel, we do have an uptrend, so that's that's the main thing. So we're looking for some strong bars now in the right place, and so we're looking for if we get some no supply low volume down bar followed by the next bar up, and that might give us an entry as well. But we just don't have it at the moment. What we have is some major distribution up the top here, and we might need to spend a bit of time away from that before we look to and if it was minor weakness, we could probably excuse it a little bit. There's pretty high volume there, but anyway, if we get an entry, there's one there, low supply down bar test, followed by the confirmation bar and slightly more volume. There's your entry. Then we can target a target resistance. Then will be the $1 mark roughly, and then the top of that bar is what's at the $1.06 roughly, $1.06.5. Support line, I've got the bottom of our highest volume bar. Oh, hang on, there we go. The bottom of our highest volume bar is 73 cents. We have our upthrust bar there. The close of that bar is 84 cents. So we can have a look at those areas, and that'll actually that 84 cents will be around the uptrend line here. So we can have a look to see what happens when it gets there as well. But it could possibly come all the way down to the 73 cents even. And this is where they were accumulating under this area before. So that might try and get down on top. That area will come an area of, that'll be a good support area if it ever comes down there for a possible low risk entry if we see some strong bars appearing, or some no supply bars appearing, and in that area. But we'll just have to see. But anyway, that's why we don't chase the high volume, because that's what can happen unless we're doing short-term, really short-term stuff. If you're good at that, then go for it. But if you're looking for a long-term entry, you don't need to chase the high volume. They'll come back. If they're bullish, they'll come back to it. So that's TRH. This is GCN, Go Connect, and you can see they had a bit of distribution, or a lot of distribution here on these really high volume up bars. This is the weekly chart. And they're distributing on those bars from the get-go. As you can see from the, you've got the high volume spike up, trap up, closing low, and so that was all selling, and that's what started this. There must have been some announcement, some excitement. It ran up, and then up thrust. It's a hidden up thrust and full of selling, and that's how smart money sell. They sell on up bars because it's the only way they can do most of the selling is on up bars. And so when we see really high volume, that alerts us to the professional money in the market. Volume represents for the most part the activity of the professional money in the market. And when we see high volume, that means they're very active, and then we're very interested to see how price reacts. And when price spikes up and closes low like that on very high volume, then that's very weak. That shows that there's a lot of selling. If the professionals had been buying alongside the herd, then the price would have closed high. Anyway, so I've got this little downtrend channel here taken from this pivot low to this pivot low. Just connected the that first high, that pivot high there. That's kind of worked for us, and gone up. Had some narrow spread down bar, so there's some accumulation happening there because it's a narrow spread. It's hot increased volume, so they must have been buying on that bar. All the sell orders are being satisfied with buy orders. More importantly, the price then starts to go up, and then they come back and they test it again. They have very light volume that week, and then it starts going up. But the volume is excessive. Even on this bar here, they're up thrusting. It could be they're absorbing the supply in this area, and that looks like that's what happened. And they pushed up, but it's been sold into now. The volume's very high, but when you've got a downtrend behind you like that, there's a lot of trapped supply. A lot of trapped buyers have bought in, will now just exit into any sort of a rally. So that's a problem we got now, and that was sold into heavily. because the next bar closed down. If it was all buying, then we couldn't collapse like that. And now the next bar did close down on very lighter volume. So, but what we really want to see is narrow spread, a narrow spread, and really light volume down now. We've got the 1 cent there, which is the bottom of this bar. It's probably your critical support. It's still in your downtrend channel, so you've got to be aware of that as well. The resistance will be your 2.2 and your 2.5 or 2.6, sorry, the high and close of this bar. So we don't really have a long setup there yet. The other thing, I just put a swing chart on there. This is a Kagi style swing chart, and the idea being that you look for your higher highs and higher lows. So you get a higher low there, and you can enter on the break of your higher high. It works best if you're trending. If you're not trending, you're going to get taken out quite a bit. But if you're in an uptrend, then it can be quite good. If you're in a downtrend, they're not so good. Some people just buy the where it turns green and settle when it turns red. But probably the way I would trade them is you get your higher low and then buy the break of your higher high of the previous high. Higher low, buy the break of your previous high, sell when they turn red. So that's a Kagi style chart. But anyway, what I'll show you here is that you're getting lower highs and lower lows. You've just made another lower low too on the Kagi, so, and it's actually put in a sell signal there. So if you're swing trading it, we don't have an entry, swing entry, and the Kagi takes its it's a bit like point and figure, and it just uses the closes. It's not time based. It uses it goes by the closes, and if you get a higher close, it goes up, keeps going up until you get a lower close, depending on what percentage you use or what box size you use. A bit like a point and figure, and they can be very useful to trade with if the market's trending. You would have got a trade there, a buy and a sell there on the Kagi, but you wouldn't have known at the time. The only thing I have against it is you wouldn't have known at the time that you're in an uptrend, or that you're going to be able to start an uptrend, say. But you could have entered the trade on the break of the high and just moved your stops up, and then you would have got taken out on the sell signal. But you did make a higher high there, but you haven't made a higher low. You're making another higher low now as well. So so there's no entry on that, no swing entry on that at the moment, unfortunately. I'll take that Kagi off. That's in pro real time. You can get those Kagi charts as well, and if you just do a bit of read up on them, how to trade them, they can be quite useful if the market's trending. But we are in a downtrend, so we want to move away from this downtrend. On the weekly chart, and we haven't really. We do have some evidence of accumulation in the bottom here, some down bars that have had some increase in volume, but we now have a very weak bar here, and we don't want to take the low of this bar out. We want to see the low of this bar supported with some, that's what we're watching for, some low volume, narrow spread like that one there, bars supporting on that bar, or supporting somewhere in the channel, and the next bar closing higher. But really our good entries will be if we're in an uptrend, and we're not really in an uptrend yet. But we can probably do a little trend channel, yes, because we do have a higher. I mean, that's a bit speculative for TRH, but we can have a look at it anyway. But that's a weak bar being a high volume up bar that's come off. And so yeah, so your support would be your 1 cent, and then you've got your lows down as low as the 0.006 or 006, and we really need to break away from this sideways channel to see what's going to go on. SXG, this is the weekly chart, and it's just been trading flat at the moment, so it's probably not a real lot we can do with that because it's not telling us anything. We've got the this week bar here, so we can suppose we can mark the low of that bar. And see how that's why we don't chase these high volume up bars. See, if you bought up there, you'd be holding a paper loss. If they're really bullish, if smart money are really bullish, they'll come back and test, and that's what we'd be looking for. But we can mark the high of that bar, I suppose, as target resistance. It's 20 cents when it decides it wants to get up there. Probably can mark the close of that bar as well. Well, actually, we've got some other high volume bars here we can look at. Our highest volume bar is actually that one. The high of that is the 10.5 cents. So put that 10.5 cents on there. See our high volume up bars. Smart money typically sell on up bars, and the prices come off. And I think what's really happened there, I think the volume there is not that high actually for a week. It's 2 million. So I think what's happened there, there's been some sort of announcement or something, and but there's just too many trapped holders in here selling into, you know, they're bought on the wrong side of the trade and they just want to get out on it, and they'll get out on any sort of rally, get their money back, get out, go trade something else. And it's, you know, unless the professional money is supporting a move up, it can't go up. It doesn't matter how good it is. Unless the professional money is supporting the move, it can't go up. The herd, when they buy an announcement, they can create a spike, but then they don't buy anymore. They can't contribute to the share price anymore. They need new buyers to keep coming in, and if the professionals aren't in there continually transacting with them and buying it as well, eventually new buyers run out, and it just collapses. And that's because all the trapped holders in this area here will be resisting the price going up, and now it's collapsed below that area now, and that was a weak bar there. Looks like it had a high volume up bar but narrow spread. It tested, which was good. Low volume, good, but the test failed because the next bar closed lower, but it was a good test in itself. Very low supply, so we're hoping we might get a bit of a response to that. Then that's what we'll be looking for, the next bar closing higher. But then it's gone down like that on low volume, so that tells us that that testing has failed. What they've done is they've sold, this has been sold into this narrow spread. All the sell orders, all the buy orders have been satisfied with sell orders, and then it's just collapsed. So so that's a failed test. So that's the important thing. When you see a test, for the test to be successful, the next bar has to close higher. And we want to see it close higher and slightly more volume, not excessive volume. Excessive volume on up will contain selling, and we want to see less selling on the down, which we did, but then we want to see a response to see if there's any interest then in that low supply, and there wasn't in this case, and the price collapsed lower. So it's just still in the bottom here. You can probably have a look at the daily just to See, there's no, it's come down, but there's very low volume. There's no volume on these. I think the problem here is you see a high volume when it did kick in, you see a really big upthrust, so you don't want to be buying those. That's knocked it back. Let's try it again. That is just catching supply from trapped holders. And that's knocked it back, see? High volume up, knocked back. So that's why you don't chase them. If they're being supported by the professionals, they'll test it. So that was never tested. That just collapsed. So, but we have very low selling pressure around this area now at the moment. And but there's nothing there to tell us that smart money are particularly interested in this stock at the moment at all. It's just sort of just very illiquid, very erratic, and so it's up to you how you want to invest in it, if you like the fundamentals or why you invest in it. But there's no VSA long entry on the stock, even though there's no selling pressure there at all. It's just sort of floating around at the moment in along the bottom. So you've got your lows there at 5.8 cents. Go back to the weekly. I suppose you could say, well, if it got down to 4.6 cents, then that would probably be low risk, or even your 5.9 cents. I suppose if you're wanting to buy it long term, you could buy it at 5.8 cents and put a very tight stop in, or but you've got the really low is the 4.6, so you know it's up to you. But there's no long entry there. It's just doing nothing at the moment, going sideways. And look, the longer it goes sideways, the bigger the move it can make up, because the more chance there is of accumulation happening. I don't really see. Maybe they are accumulating on these little spurts up, but they're not taking. It's not going anywhere. So it's just dribbling along there. You could argue that they're supporting the lows here at 5.7, 5.9 cents, so that could be good. But there's yeah. So your resistance will be at 7.4 cents. Your first major resistance, 7.4 cents. The next one is 10.5 cents. You probably can put one there at these spikes here at 12.5, 13 cents, and then you've got your 20 cents. And your support at the 5.9 or 5.8 cents, and below that at 4.5 cents. That's SXG.